Kirk Duckwell here with the House Geeks and the Twin Cities Real Estate Show with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, is this warmer weather going to bring an early peak to our real estate market? We'll dive into the data in just a second. But if you're thinking about buying or selling a home here in the Twin Cities in the next year or so, or just want to keep up with what's happening with the latest Twin Cities real estate trends, make sure you click on that subscribe button. Also, I want to let everybody know about a free upcoming class, homebuyer education class that we have. That's Hack Home Buying. I can fill class after class after class of real estate agents that want to take this class, the continuing ed version of it that we do. If you're thinking about buying a house, you should check out this class too. Again, it's a free class. It's going to be on March 6th at the number 12 Sitery in Minneapolis. All right, let's dive into the data and take a look at what's going on in our market. Okay, looking at the showings per week per listing, median sale price range, so that's 250 to 500K in the Twin Cities area. We're watching that showing activity jump back up after a little bit of a lull there, partially because we saw rates go above 7 a couple weeks ago, as well as the Super Bowl and kind of our first bigger snow event, if you would call it that, that we've seen so far this year. So it was at 4.85, jumping up to 5.1. Again, that's the average number of showings happening on a house in that 250 to 500K range. So this is actually down over last year by 9%. However, we're seeing total showings for areas used up at 2847 in comparison to last year's 2492. This is just basically means we have more inventory on the market at this point. We are also seeing days on market slowly dropping. Week over week went down from 35.1 to 33.5. Some other points of interest. New listings into the marketplace continuing to rise over last year. So at the same time, 896. This year, 1,061. Moving along, pending sales also tracking ahead as well. And then inventory of homes, as mentioned, tracking ahead of last year at about 3.5%. Okay, in other news, inspections waived 29% of the time. That's on the rise. That was down closer to 20% of the time just about a month ago. Cash transactions, where they were tracking at almost 30% of the market, now are at 17%. Conventional transactions, 75%. And FHA financing, only 2% of the time. VA actually ahead of that at 5%. Purchase price has now broken the 100% mark. So we are seeing people offering over, on average, 100.3% of the time. Median, that's right at 100. Sellers' contributions towards closing costs at 28% of the time. Home warranties included 7%. Contingency on sale of somebody's home, 11%. Escalation clauses, 3%. Appraisal gaps being used 8% of the time. And cancellation rates sitting there at 6%. And this is all courtesy of Home Free TC. Thank you for that data. Another notable point on the 12-month rolling average, we have kind of come out of this very flat point for almost 8 months, where we're starting to track ahead now for the last few months, up 1.1% on the 12-month rolling. Regarding financing and interest rates, well, first of all, we did see rates start to move up a few weeks, about a month or so ago now, and that caused a drop in the application rate. However, because of that heavy application rate when rates were lower back in that late December timeline, we're seeing those buyers out there now will probably feel the effects of this lower application rate here in the next 30 days to 60 days, which could mean we may see that early peak. As mentioned, we did see a lot of sellers pop their listings onto the market a little earlier than anticipated. So interest rates overall over the last few weeks have just kind of been bouncing after some kind of dismal news that did not help out rates early in February, with job reports being better than expected, which actually is a negative for rates. However, later this week, I could see some news that may help rates go back down if it comes in as anticipated. Interest rates overall, yeah, really close to about that 7.25 mark on the 30-year conventional. Okay, so where does this leave us overall? Well, on our market meter, we are kind of getting up there. Probably will see our peak within the next 15 to 30-ish days. For sellers out there, we're still going to be in that decent seller's market for probably the next 60 plus days before things start to retreat into a range that's not as beneficial. So if you are thinking about selling, you might want to act sooner rather than later. So 6.94 on the market meter, when looking at our scale here, puts us right in this mildish seller's market range, right? To medium, I guess I would say. And will continue to probably rise over the next few weeks. Are we going to get into extreme seller's market range? Not sure if we're quite going to hit that, but should be pretty decent overall. For buyers out there, you do want to make sure you're just paying closer attention to the days on market. If you are doing some deal hunting, maybe waiting until the house has been on the market. We call them Monday houses. If they list on Thursday or Friday, waiting until they're out there on Monday before setting up a showing or making an offer on that property. Hopefully you found this information valuable. Again, click that subscribe button and check out that free class if you haven't attended one of those in the past. And that is on March 6th, number 12 Citery. Put a link below for that. Take care. Have a great week.